Hello and welcome back to today's Morning Report on Friday the 15th of July with me, Richard Perry, market analyst at Handtech Markets. Let's move on to cable. We've got this recovery continuing cable. We had the move yesterday that came on the back of the Bank of England deciding not to hike interest rates. Sorry, not to cut interest rates. And that took the market by a bit of as a bit of a surprise, really. You can see a pretty volatile candle that we saw as a result. Initially, it looked as though you had a corrective move coming back in with Wednesday's candle negative and then initial sort of downside move on cable, but that sort of gave way to a quite a strong jump to the upside ultimately, and it sort of continued today, and we've got sort of 70, 80 ticks up on the day now. It's interesting, this marginal sort of bearish engulfing candle that we've got at 5 o'clock this morning. 3480, that's resistance from that candle. You've still got the fact that this move is running higher. You've now had sort of 1, 2, 3, 4, 5. Looks like 5 positive candles in out of the last 6 days. You see the momentum indicators turning around. Stochastics rising nicely. MACD lines crossing higher. RSI pulling higher as well. Still think I'm still of the belief this is going to play out as a rally that gets sold into. It's just as though that the near-term momentum is behind this move now, so it looks like you're going to continue to the upside, but you're now starting to come up against the next real sort of band of resistance. 35.35 was that rally high there. And then 35.55 was the sort of post-Brexit congestion low. So that is a fairly sizable resistance, and I think that'll be interesting to see what happens around that stage on cable. But for now, we've got this rally in place, and it's still going. There's no real reason to not back the rally because the Bank of England has not cut interest rates. So subsequently, the momentum from that could well continue. But as I said, I think that this is ultimately going to prove to be another chance to sell, and we're going to see further downside, but it's just when that happens is not entirely clear yet, because the near-term momentum is positive. So near-term momentum continues to retrace this move. 38.2% is Fibonacci retracement of the Brexit sell-off. 36.45. So few overhead resistances to look out, but certainly the momentum is with this rally at the moment. So I wish you good luck in your trading, and I'll speak to you later. Thank you.